Australia's financial markets are still deluded on interest rates. Hello everybody, it's Lee Van Onselen here, the unconventional economist, coming at you again with a belated macro breakdown. Sorry I've been a little bit ill over the past week. Today I want to talk about the market's latest delusional forecasts on Australian interest rates. While most Australian economists are tipping that the Reserve Bank of Australia will lift Australia's interest rate by 2% over the next 18 months, Australia's futures market has upped its forecast and is now predicting that the Reserve Bank of Australia will lift the cash rate to 2.75% by the end of this year and to 3.7% by September 2023. Bearing in mind that the cash rate was only 0.1% this week, so we're looking at massive rises under the futures market forecast. So what would this mean to Australian mortgage holders? Well, obviously mortgage repayments would soar. The table presented above illustrates these changes. It takes the median dwelling price from CoreLogic, applies the average discount variable mortgage rate from the Reserve Bank of Australia, assumes a 30-year principal and interest loan, the 20% deposit, and then applies the futures market's projected increases in interest rates. Under these scenarios, the mortgage repayments on the median price Australian home would soar by $957 or 36% per month by the end of 2022, and by a whopping $1,332, that is a 50% increase by August 2023. Repayments would obviously be higher across the combined capital cities and much higher across Sydney, which is Australia's most expensive city. It's also worth pointing out that Australia's debt servicing burden, that is the percentage of household disposable income going towards debt repayments, both principal and interest, would soar way above the 2008 global financial crisis peak. The percentage of total Australian household income chewed up by debt repayments would be roughly 2% higher than the 2008 global financial peak. By September 2023, a whopping 1/5 of aggregate Australian household income would go towards debt repayments, which is up from 13.6% currently. Thus, Australian households would experience a mortgage shock that they'd never experienced before. It would be truly monumental. Now, my view remains unchanged. I consider the market's interest rate forecast to be delusional, given rate rises of this magnitude would very likely send many Australian households broke. It would crash the housing market and consumer spending, and would plunge the Australian economy into an unnecessary recession. For what it's worth, the only market participant with a sensible view on interest rates is the Commonwealth Bank of Australia, which is tipping a peak in the cash rate of 1.25%. In my view, anything higher than this would be economic suicide for Australia. And this is why I don't believe the Reserve Bank of Australia will follow the bullish forecasts of the economists nor the market. Anyway, that's the video today. Thanks for watching, and I'll see you in the next one.